Well, 2008 was a disaster for hedge funds, with a record 1,471 funds shutting their doors. But my next guest sees signs that hedge funds have turned a corner and the worst of the carnage is over. He's Kenneth Heinz, president of Hedge Fund Research, joining us this morning from Chicago. And Ken, thanks so much for being with us, because hedge funds is always a very interesting topic for us to talk about. Now, last year was such a disaster. Why do you say this year things are turning around?
Yeah, we've definitely seen that thus far, following the record worst calendar year for the industry, loss of 19% in 2008. In the first 7 months of the year, the industry has turned around and gained about 12% in that time frame. Now, I think that some of the dynamics that are contributing to that return are also very interesting. A lot of the top areas of performance this year were the most out-of-favor strategy last year. 3 examples of this are energy basic materials, convertible arbitrage, and other emerging market strategies. Similarly, some of the best areas of performance in 2008, macro systematic strategies and short selling strategies, have produced losses thus far in 2009.
And that alone is driving the turnaround, or the about face that we're seeing in the industry?
Well, there's a number of things at work, but I think that those are certainly significant in that regard. Now, I think that with regard to the rate of liquidations, we did see, in addition, I guess not surprisingly, in addition to 2008 being the worst calendar year performance, it was also a record year in terms of fund liquidations. Now, in the first quarter, we continued to see a high rate of liquidations, but it did fall from that of what we saw in the fourth quarter. In the first quarter, we saw 376 funds liquidate versus what was over 775 in the fourth quarter alone.
Yeah.
Another interesting quality of that is that high rate of liquidations in the fund-of-fund space. Over half of the liquidations in the first quarter were actually in fund-of-hedge funds. And this probably wouldn't be too surprising to many of the viewers, given a lot of the concern that was raised with regard to these types of strategies following the end of 2008 and exposure that certain funds had to Madoff securities.
And only time to ask you this, Ken. I mean, in terms of the liquidations, a lot different, more different characteristics this time around than last year, right? Because last year people were just panicking and taking their money out.
They are different. I mean, I certainly think the fund of funds is one interesting quality. Another is that there is a very tight relation between performance and liquidation. We saw disproportionately high levels of liquidations in relative value strategies last year, and that was in different performance. This year, in 2009, you've seen higher rate of liquidations in macro funds, which did well last year, poorly this year. And I think that I could also agree that some of the liquidations we've seen thus far in 2009, and this is always kind of a tenuous generalization because it could change relatively quickly, but they have been sort of orderly wind-down type situations, as opposed to what we maybe saw 10 years ago, more of a systemic, liquidity-driven, near total loss to investors. That has been the trend recently, and we'll continue to see how that plays out.
Okay. Thank you so much, Ken, for talking to us about hedge funds. Ken Heinz, the president of Hedge Fund Research.